Post-shutdown, and while the US looks to get back on track, what does the future hold for trade neighbours Latin America? Dr. Federico Foders of the Kiel Institute for the World Economy is on the phone with me now. Dr. Foders, Latin American currencies are currently among the most devalued this year relative to the dollar. Are today's retail sales figures released out of Mexico indicative of the Mexican peso's purchasing power?
I don't think so, because I think that the Mexican peso's purchasing power depends on domestic inflation, which is very low at 3.4% on an annual basis. And I think a slightly devalued peso might help Mexican exports, and well, they might have less imports, but that's not a bad thing.
There has been some discussion regarding potential impact of the US government shutdown on Latin America economies. Market insiders have alluded to currency downgrades, a loss of competitiveness in exports and subsequently global trade, as well as potentially diminished GDP figures. What's your outlook for Latin America in the wake of the shutdown debacle?
Well, I expect Mexico to feel the blow, because the Mexican and the U.S. business cycles are very closely linked. As you know, over 80% of Mexican exports they go to the U.S. market, and maybe some of the Caribbean or Central American countries are also very closely linked to economic developments in the U.S. But the rest of Latin America is fairly independent. They have diversified trade and investment flows in the last years, so I don't think, and if I may add one important information, we all expect the U.S. to recover swiftly during the next year, so I think that Latin America will really benefit from that.
Spanish Prime Minister Mariano Rajoy went to great lengths at the recent Ibero-American summit to highlight Latin America as a preferred destination for investment by Spanish businesses. But given Spain's current economic conditions, how mutually beneficial is this relationship, in your opinion?
Well, I think it could become a very important relationship for Spain, because, as you know, Spain is an observer in the recently formed Pacific Alliance, and has also expressed interest in joining it as a full member, seeking to diversify its trade and investment relations not only with Latin America but also with the Asian Pacific region. And this is exactly the kind of stimulus, the kind of healthy stimulus that the Spanish economy needs.
In what has been a roller coaster year for emerging markets, would you agree with the IMF's expectations that the region will grow by 2.75% in 2013 and 3% in 2014? And how will the current EM stock market rally support these expectations? I
must repeat that our expectations are that the US will recover over the next 12 months, so that actually we expect even a higher rate of growth in Latin America, and particularly also of Mexico, Brazil, Colombia, you know, the major economies of the region. So that I think that the great blow that has been caused to Latin America is more related to weaker growth in China and maybe in India than by what has happened in the U.S. So quantitative easing is expected to continue after the new nomination as head of the Fed. The European Central Bank will also continue with a rate of interest near zero. The Bank of Japan too, so there will be enough liquidity, and I think those are the best conditions for a worldwide recovery.
Federico, many thanks for your comments today. For more exclusive interviews with market insiders, stay tuned to Dukascopy TV. Goodbye for now.